raw material prices is taking a toll on many auto ancillary companies, both in terms of financial performance and the stock price. Now, one such company is Amara Raja Batteries, whose stock price has plummeted more than 45% from its high achieved in Jan 2021. However, we believe all the big concerns have been factored into the price, and the current level provides a very attractive entry point. Moreover, the valuations are quite attractive, and hence we advise investors to add the company to their core portfolio from a long-term perspective. So what do we like about the company? Amara Raja is a part of the duopolistic lead-acid battery market with significant presence across automotive, aftermarket and industrial segments. Now, post-COVID, there has been a significant recovery in demand across all the segments. OEM demand has picked up sharply. This, in fact, was visible in its Q3 FY22 numbers, wherein the top line witnessed a 20.7% year-on-year growth. As per the management, two-wheelers and passenger cars are expected to pick up further, driven by opening up of schools, colleges and even offices. The management is very upbeat about these segments and has indicated that the preference for personal transport will continue to be a key growth driver. With pickup in economic activity, CV segment has seen sharp demand recovery. In fact, the union budget had promised a huge increase in investment to revive economic growth. This is a positive development for the construction and capital goods sectors and is expected to boost CV demand further. With the economy returning to normalcy, industrial segment is seeing strong traction as well. As the government investment in these pockets picks up, demand for batteries is expected to see a strong uptick. Another important growth driver for Amara Raja is replacement segment, which has been doing very well. Around 45% of the total revenue comes from replacement demand. Even when there was muted demand from OEMs due to severe shortage of semiconductors, battery manufacturers continued to post strong top-line growth led by strong replacement demand. And these companies generate significant revenues from this segment. Though the stock has been punished partially due to being old school and not catching up with fresh EV opportunities, we see no reason for this, as Amara Raja is doing all that it takes to cater to electric vehicles. It's coming up with a 100 megawatt-hour lithium-ion battery plant in Andhra to charge up its electric strategy. It's already launched e-rickshaw battery and has started supplying to OEMs as well. It's also started supplying chargers to BPCL and is in the process of developing board chargers for two-wheelers and three-wheelers. Amara Raja has also opened an advanced lithium technology research hub with a pilot plant facility for a cell development project based on the technology transferred by ISRO. Furthermore, it will invest in European e-mobility battery manufacturer Innobat Auto, which will give the company a foothold in the EV ecosystem. Soaring prices of lead, which is a key raw material, is impacting Amara Raja's EBITDA. Its EBITDA margins contracted as much as 362 basis points year-on-year during Q3. However, it has been taking various measures to arrest the impact of rising raw material prices. For instance, it hiked prices by 7 to 8% on a YOY basis to pass on cost inflation. Amara Raja has earmarked an outlay of 280 crores for backward integration. It plans to set up a lead recycling unit with a 1 lakh ton capacity. It's also setting up a solar power plant with a capacity of 50 megawatts with an outlay of 220 crores. All these efforts are expected to save costs from FY23, and it is a long-term solution to rising raw material prices. In terms of valuations, Amara Raja is now trading at 10.8 times FY24 projected earnings, which is a very attractive valuation for a company of its standing. We advise investors to include the stock, therefore, for the long term. Any weakness in the automotive segment can adversely affect the financial performance of the company, so it will be an important risk to watch out for. Also, a rise in raw material prices and an adverse movement of the rupee against the dollar could also hurt operating profitability, so important to keep that in mind as well.